Welcome to the IVM Podcast Network.
This is a special edition of Paisa, Vaisa. On this episode, we have Mahavir Chopra, Director, Health, Life and Strategic Initiatives at coverfox.com. Chopra has over 12 years of experience with online insurance and is an expert in the field. This is the first part of the series where Anupam and Mahavir demystify myths relating to insurance and explain life-term insurance in depth.
Hi Mahavir, welcome to the show. Thanks for joining us. Today we're going to be talking about insurance and we're going to demystify the topic for a lot of our listeners because this is one topic on which a lot of people have questions, a lot of preconceived notions, a lot of things that they're not very clear about. To the listeners, Mahavir is from my school, St. Stanislaus, Bandra. So he happens to be an alumni from our school. So it's also good to have another Bandra boy out here with me. And it's going to be a special show on a topic that a lot of us need to know a lot of things about. Let's get right to the questions. We'll start off with a lot of myths about insurance. Mahavir, what are these? Because a lot of people really don't know how insurance works. A lot of them think, for example, that insurance is available forever. It's some kind of a guaranteed lottery. It's a scam. Insurance companies are out to cheat you and stuff like that. Maybe we can start there about some myths, some preconceived ideas that people have about insurance.
Yeah, sure. So the thing is that typically insurance, the way it started in the country, it is always known to be LIC, right? Meaning people know it as LIC. And the thing is that because it has always been an investment product traditionally that people have known insurance about, meaning whatever they knew insurance as a product. There has been this constant myth that we come across when we are basically talking to customers or we are talking to people or I'm talking to friends, which is that insurance is available forever, which basically the idea being that I can buy insurance whenever I want. That could be very different actually because the insurance company does not look at it that way, meaning the thing is that typically, let's look at a car insurance, right? So you don't get a car insurance, let's say after 10 years. Or if you are looking at a health insurance, you may get health insurance after, let's say, even after 70, but you'll have to be very, very healthy. You're supposed to not have any diseases, which is kind of very impractical or it's not possible in the kind of lifestyle we live.
Sure.
So the current myth, that meaning the current what we come across regularly is that people feel that okay, there's still some time, I'm still young, I'm still healthy, I'll buy insurance later, and there's a lot of procrastination that we see on insurance, typically health and term life insurance kind of products.
Okay, so what should a guy do if he or she is starting a new job on day one and he says, okay, tell me about what insurance products do I need, should I buy? Like right now is a good time. I'm someone who's just starting off my job and my career.
Right. So typically when you're starting off a job, that means mostly you will start paying off bills of your house. You'll start taking more responsibilities. That's when basically you are basically becoming a kind of a breadwinner of your house. So typically it's great if you can afford it. Obviously you should buy a term life insurance. If not, at least you should start with a personal accident insurance. So that's an insurance which is available at let's say 2,000 rupees will cover you for around 20 lakh of premium. 20 lakh of cover, sorry.
Sure.
And or you should buy at least a term life insurance. So term life insurance is something that you should buy right away. And let's say that age, you're looking at an age band, meaning when a person starts earning would be in an age band of around 24, 25.
Right.
By 28, 29, you should start looking at a health insurance.
Okay.
So that should be the second product that you should buy.
I'm going to get into this term life, right? Because we've got this, I can call it legacy, or we've had this thing that I'm paying premium, but मुझे कुछ मिलता नहीं है उसमें, कुछ return नहीं मिलता है.
Right.
So I think LIC has over the years always had these endowment products or ULIPs, which has ingrained a certain expectation within our heads that when I'm paying a certain premium every year, I should be getting something in return. A term life cover is nothing like that. You pay a certain amount and when you die, that money goes to your dependents or whoever you've named out there. So this is one thing which always keeps on coming to me, that how can I pay a premium every year and not get anything out of it? How do we get people to figure out that what exactly is a term life cover? Is it the cheapest insurance product out there? And therefore, is it really in your benefit to buy it?
Right. So it's a great question, Anupam. So the thing is that people out in India today, there are multiple issues, right? So typically, like you said, insurers traditionally, like an LIC, have usually looked at the market, the Indian market, as some market where you can mobilize the savings into investments more than, let's say, educating the mass about risk management, which is something which I feel is a big flaw, meaning I feel that was a great opportunity that a company like LIC had to educate the market. But somehow maybe it could also be a customer behavior or an Indian, if I could use the word mentality, that they may have tried and failed, saying that, okay, I may have tried a risk product. We are a risk-averse country. We are a kind of a country where I think if I put a limbu mirchi or I put a tikka on my head, I think there will be no claims, right?
Sure.
I'll not have any problems. My car will be safe. My house will be safe. My health will be safe. So I just need to go and pray every day. So that's been a tradition in India, and that you see that every day that people are kind of to a level risk averse in the country. So that's somehow going off. You're seeing people getting more calculative, and you're seeing people becoming more scientific, and the thought process is changing. But that's something that is coming as a tradition. So that is leading to people thinking more about cashback products or money back products.
Okay.
But if you look at the calculations, meaning if India में लोगों को एक चीज समझ में आती है तो math समझ में आता है बहुत अच्छे से, right? And if you do that, it's very simple, right? When you do a money back product and you do any kind of calculation, the best of the calculations, and if you sit and you are able to do even basic level of math, you'll come to know that the return that you get from a LIC kind of a product, which is maybe, I'm using LIC as a generic word, not a brand. That's a disclaimer because we may work with LIC tomorrow. But the thing is that what happens is that you end up getting around 5 to 6 to 7% rate of interest, right? And it could go as low as 4%. That's something that you can get from your savings bank account also, right? There are much better, and I'm this show is about money, so I'm sure the people know about it more than now about it, is that there are better avenues to invest and get a better rate of interest. So the world today is breaking you should break your savings into two parts. One is basically first get your risk covered. So you basically ensure that your plans, your goals and your savings are protected by using a risk management product like an insurance. And the remaining money obviously should be invested in any investment avenue. It could be any of your choice, and depending upon your age and your risk appetite.
Okay, so I'm going to go a bit into explaining this 4% return that you spoke about. Okay, 4, 5, 6, 7, whatever the number is. So the way it works is like this. LIC or any company for that matter will come to you saying that here is a policy. You pay 1 lakh every year for 20 years. Okay, you will get an insurance cover of 20 lakhs. Okay. After 20 years, you will get 1 lakh every year for the rest of your life. This is how it's packaged. Now, someone who's like you or like me will know that, okay, I'm going to put this in Excel and just make a nice and simple IRR and figure out, you know what, this is giving me only 5 or 6% return. That's for you or me. So that's how these products work, right? It involves a fairly largish kind of a premium every year, an insurance cover, and at the end of the period, there will be some kind of a recurring income given to you for the next whatever till you retire or something. Even children's plans are kind of structured like that. So the thing here is that all of these products will still give you 4, 5, 6, 7%. I don't think if it's even 7% because interest rates are falling in India right now. So is that how the policy works?
Yeah, it does work like that. But the thing is that look at the same example, right? So you said that someone who's paying a lakh of premium, typically today in India, you'll get a 10x cover for a return of premium product. So you'll get a 10 lakh cover. A 10 lakh cover actually, if you look at a term life product, will cost you 1,000 rupees. Right? So you are paying you're paying something which is 100 times more than what you should be paying, and then getting your own money back with 4% interest, which you would have anyways got if you would have taken the remaining money, which is the 99,000 rupees, and put it in any other product, you would have still got a 10 lakh cover. In fact, by putting, let's say, 5,000 bucks, you would have got a 50 lakh cover, which would have been much higher, right? So, term life insurance, the best part of term life insurance is that because it covers only risk, you get it at an extremely cheap cost. It's approximately 100 and 120 rupees per lakh kind of a cost. So, you are getting it at such a cheap cost that it's really good at basically breaking this into two parts, taking term life separately and then looking at various investment products.
So, tip number one, if you're starting your job, get a term life policy, pure term life policy that covers only risks, so that when you, if obviously I hope that you don't, but if you die, the money goes to your dependents and you don't mix that up with investment. If you have to pay 10,000 bucks as premium, pay 1,000 for a good insurance cover in a term life policy, and put 9,000 in a mutual fund or whatever it is. You can consult your financial advisor for the details, but try not to mix insurance and investments. They are both best kept separate. When you're going for something that mixes the both, the effective return that you're getting over 5, 10, 25 years or whatever the period of the policy is will be really low. The stock markets or anything else can give you a much higher return over a longer period. So, we covered term insurance in that, and that was the first of a 3-part conversation. And the second part is going to be on health insurance and much more. Tune in for that next Monday.
Thank you for listening. You can get in touch with Anupam and Mahavir on Twitter. Their Twitter handles are @B50 and @TheMahavir. If you have any money-related questions, you can tweet to us. Our handle is @IVM Podcasts or email us at paisavaisa@indusvox.com.
एक्सक्यूज मी भैया, एक्सक्यूज मी.
बोलिए मैडम.
मेन्यू में क्या है?
मेन्यू में सीन अनसीन है, पॉडकास्ट है, ऑनकोर्स है, साइरस है, मेड इन इंडिया, रीडिस्कवरी प्रोजेक्ट, एम्पावरिंग सीरीज, सेक्स वैक्स है, IVM लाइक्स है, सिंप्लीफाइड है, कीपिंग इट क्वियर है, थिंग्स एंड डेस्टिनेशंस है, माय नेबर जकरबर्ग है और द फैन गराज है. आपको क्या चाहिए?
एक बार रिपीट कर देंगे क्या?
रिपीट नहीं करता हम. आप जाओ IVMpodcast.com पे और सुनो ये सब, या फिर डाउनलोड करो उनका ऐप. सब आपकी उंगलियों पे.